Good night, everyone. Today is Monday, August the 22nd, and we're gonna go with the daily technical video day. Guys, not really that much change today on the market. Very slow market, a range that it keeps happening. The dollar continues to be in the fight between the bulls and the bears, and it looks well supported both sides. And the thing is that the range keep getting contracting and contracting and contracting. So today we're presenting a new scenario on the dollar. Even though we have told you guys about it, we are presenting the scenario. I mean, this scenario can go both ways, to be honest with you. We're presenting here the bearish dollar scenario when you got A, B, C, A, B, C, B, A, B, C, C, A, B, C, D, and then we're gonna go higher in E. But this also can be that this is a B-way triangle, and then you got A, right? And then you got A, B, C, and then we go higher in D, another E right here, and then higher to around the 77 area in C. Unbelievable, but that's how we see it. We're presenting the triangle so you guys see both ways of the spectrum. Anyway, we believe that the dollar is gonna trade higher very soon, both ways. Now, the bullish dollar scenario, the most bullish of the ones, we don't see it that way in some degrees because of the dollar cat, but it's possible. But well, the dollar cat is telling me that it's gonna be dollar strength, so that much of dollar strength, I doubt it, due to the fact that this recovery in the dollar cat is the one that took from the lows to when it went to the 1 point something change right there. So I don't know if it's gonna get that big of the hair, but anyway, Elliott Wave aging is telling me that either to 77 or even to 75 the dollar should get strong. Remember, there is also the bearish scenario, the most bearish scenario, but we're presenting the triangle so you guys can have an idea what we're talking about. Now, if we take a look at the dollar in a 1 hour chart, this is how it looks, the scenario. Now, something that came out today, which we really don't like, is the idea that we were expecting, due to the 5-way move right here and this decline, we were expecting that this move right here is gonna break from around here to the upside. Now the momentum hasn't been there, and then we presenting this scenario when we got A, B, C on B. We got, this is A, and then A, B, C here on B, and then the dollar is gonna trade lower back again before going higher again. Unbelievable shoppiness, but that can be the case. This is the look, the contraction in the triangle, guys. It's getting close, the range close and close, and I believe in the next 48 hours we're gonna see a breakout either side. If the bearish triangle is in place, this trend line needs to hold. If you see that this break higher, then we can be in place for the biggest run in favor of the dollar. But anyway, we believe that the next big move is gonna be that in the short time frame, the next big move is gonna be in favor of the dollar. Then after, we're gonna see the biggest move. I'm talking about the 8 hour, the daily, and the weekly, is when the dollar is gonna get sold. Now let's move on to oil, which is been doing what we say it was supposed to do. Oil went down in 5, and then A, B, and it looks like it's taking one of those wages that oil does a lot, and then it goes to C here. I would say around 85.27 should be a good resistant area for oil. From there, oil possible is gonna trade lower, which is gonna take the dollar higher. That's how we base our forecast, guys. Now let's move on to the individual pairs. Guys, on the individual pairs, we're gonna start as always with the euro dollar. We've been saying on the room all day that the euro needs to hold this low right here in order to avoid another visit to the 144.70 area or even higher. Why? Because we see on a lesser degree, we see a five-way move right here. So if the euro avoid that, we got two scenarios. The most bearish one, which call for 1-2-1-2. Usually the euro do not nest that big. The second scenario is A and then A, B, C on a flat, and we're gonna trade higher to the area that we've been proposing, which is 144.70 area before going lower. That's the second scenario on the euro. Either way, we believe that we're gonna see a risk on 9 like we did yesterday. That's our belief, and that's what the charts are saying. Now, why we say that? We say that because we see this pair, S&P. And S&P, it looks like it did a 5 to yesterday, and possible is doing a flat wave too. That being the case, S&P is gonna trade higher, and take the risk with them. Now, another pair that is showing a bullish structure is Aussie. In Aussie, we're presenting this triangle when we have A, B, C, D, and we should trade higher than E. This is in Aussie. Another one is a possible also in New Zealand when we got the same more or less a scenario, and then we got A, B, C, a D can be down here, and then E and lower. So most of the pairs, they are showing type of short-term bullish structures favoring against the dollar. Then we go to cable, and we see in cable also a three-way move from the highs ABZ, and needs to test at least 165.50 before lower. Another bullish risk scenario. Then we see the EuroCAD. What the EuroCAD is showing is it needs to trust higher in favor of the euro. So technically speaking, the euro is gonna run more than the CAD. And finally, we see the dollar CAD, which looks like it can be doing the same scenario as euro. I see this move as a possible five-way move right here without question. So maybe is A, B, C on a flat B, and the C lower. That scenario, guys, is very possible. Otherwise, because from here you need three ways down. I don't see that this is a 5, and I keep saying that. My trading system is telling me that it's gonna trade lower tonight, but I believe that the flat B is the best scenario as possible the euro is doing, as possible the dollar the US, the index is doing. And then we need to trade below 98.22 before going higher. Now on the yen pairs, we see possible, if we take a look at the euro yen, we're presenting a less bearish count, because the idea that the euro is going to trade higher as a group, which is going to take to the 111, 112 area before going lower in the euro yen. And then the Aussie yen also is suggesting that we're gonna see a yen winnings. Now if we take a look at the dollar yen, The dollar yen is suggesting a possible yen weakness to an area around 77.26 before going lower. Now finally, let's take a look at gold. Gold today, as we forecast, is trading higher, and it looks like it's close to make a temporary high. You need to trace a trend line to dip correction very close. Possible gold is gonna do like a type of ending diagonal, testing 1933 area before seeing a retracement like we forecasting here. Okay guys, so for tonight we see again risk on, either in a lesser degree or a bigger degree, but at the end any gains on the risk trade is gonna be reversed. We see the S&P that needs to trade higher, and we see the yen pairs when the yen probably is gonna get weak. That's what we see for tonight. Get back to you guys later, guys.